Good morning, students. Welcome to this discussion on accounting standards, wherein we are going to cover a couple of topics as a part of this next series, which is about the liability-based accounting standards. So I'll just start my discussion now with accounting standard 15. Okay, so that is the standard on employee benefits. I would say a very important topic as far as the financial statements of any entity is concerned. Why? Because this is one area which you find in almost every entity, employee cost. Yeah. So that's why it becomes very relevant, right? Because everywhere you are going to see this. This is what you call as employee benefits, right? So now let's try to understand as to what do you cover when we talk about the employee benefits. So employee benefits, if you look at the requirements of this accounting standard, could be of various types. Okay. Now that is again one area that we are going to discuss. And depending on the types that we have, accounting requirement will also vary. Yeah. So you'll have different accounting requirements for different types of employee benefits. But I think first of all, we need to focus on this term employee benefits to begin with. Yeah, because once we have a complete clarity on what is an employee benefit, wherein we'll try to understand what is an employee, that is when we'll be clear in terms of what types of employee benefits could be involved as far as those employee benefits are concerned. Okay. So now what we will try to do is we'll just try to understand about this term employee benefits in further detail. See, any benefit to begin with, which is provided by the employer to the employee. Okay, so now we are talking about two parties. At the first place, what do you have? Employer. And we have an employee. Yeah. So now we are saying that any benefit which is provided by the employer to the employee. Right. Now it could be in cash, for example, salary. It could be in kind, for example, any type of benefit which is given to him. Say, for example, car is given, any other asset is given to the employee. Okay, any bonus which is given, gratuity is given, leave encashment is given. All of these are what? All of these are the contributions, considerations, by whatever nomenclature you want to call it as, which is given by employer to the employee. In this case, one important condition is attached. What is that? Such amount should be payable by the employer to the employee because employee is rendering services for the employer. Okay, so now employer is paying some amount. Yeah, so let me just call it as consideration. And employee is rendering services to the employer. Now, in return for the services which are rendered by the employee, what is employer doing? Employer is paying some amount. Yeah, employer is paying some amount to the employee. That is what constitutes employer-employee relationship. Now, this is another important area for you to understand as to what will constitute employer-employee relationship, because till the time we do not have employer-employee relationship, we cannot go to employee benefits. Okay. Yeah. So now in this case, another question arises that is it necessary that the employee should be working for the employer on a full-time basis? No. See, the employee may be working on a full-time basis, on a part-time basis, or it could also be a casual thing. Okay, which is also called as a casual labor. Important part is what? There has to be an arrangement between the two parties wherein this party, or you can say, let's suppose A, yeah, this party A becomes the employee of the employer. Only and only when this party will be considered as an employee. So this benefit will be called as employee benefit, otherwise not. Okay. So now what we will try to do is we will try to understand as to how will this party A can be considered as an employee of the counterparty. Okay. So this, let's suppose, is X Limited. It's a company, or it could be a proprietorship firm, wherein some employees are involved, or it could be any other entity. Yeah. So the nature or the structure doesn't really matter. Important thing is whether it's an employer or employee relationship or not. Okay. So now for that part, what I'll do is I'll just take you to a couple of questions. So just give me a minute. I'll just take you to those questions. We'll try to understand as to what can constitute employer-employee relationship. Now, in this case, as we discussed, any benefit which is provided by employer to employee will get covered, whether the employee is on a full-time, part-time, or casual. Payment could be made by the employer in cash or in kind. Okay, all sort of benefits are included. Now the next question arises. What are the kinds of employees covered within the purview of this standard, and whether a formal employer-employee relationship is necessary or not? Okay, this is again a very important area. So now, if you look at the accounting standard, it doesn't define the employee. Yeah. So what does the standard says? Standard says an employee may provide services to an enterprise on a full-time, part-time, permanent, casual, temporary basis, and the term would include whole-time directors and other management personnel also. So you should not be thinking that senior management or maybe the high-paying salary staff may not be considered as employee. No, any person who is rendering services and who falls within the purview of an employee will be considered as an employee, including the directors of the company. Standard is applicable to all forms of employer-employee relationship. Further, there is no specific requirement for a formal employer-employee relationship. So now, what do you consider in this case? So the standard says several factors you need to consider to determine the nature of this relationship, which is about employer-employee. What is that? Generally, outsourcing contracts may not meet the definition of employer-employee. However, such contracts need to be carefully examined. Why? Because we need to distinguish whether it's a contract of service or it's a contract for services. For example, contract for services implies a contract for rendering services. For example, say a company has engaged a professional, company has engaged a consultant. Now, in such a case, is that professional or a consultant rendering services to the company? Answer is yes. And just because the professional or the consultant is rendering services, so can we say that professional or consultant will also become the employee? Answer is no. Why? Because in such a case, that professional or consultant is not an employee. Okay, so just because services are rendered, you will not call the other party as an employee. It has to be a contract of service. Why? Because there has to be an arrangement wherein the counterparty, for example, A. So when we look at company X Limited and let's suppose a party A. So party A should be following the directions of company. Party A should be within the control of company. Okay. And A should be obliged to obey orders in the work to be performed. Further, mode and manner of performance will also be within the control of the company. Yeah. So these are some of the things that you generally look at as far as employer-employee relationship is concerned. Further, let's also look at one more example through which we'll get more clarity on this. Whether an enterprise is required to provide for employee benefits arising from informal practices. Harivansh, I'll come to your query. If you look at the standard, it says employee benefits will include informal practices as well that give rise to an obligation where the enterprise has no realistic alternative but to pay the employee benefits. Historical pattern of granting such benefits, expectation which is created, and impact on relationship with the employees in the event such benefit is withdrawn should be considered. For example, where an employer has a practice of making a lump sum payment on the occasion of Diwali festival. Let's suppose every Diwali festival, some payment is made to the employees. Okay. Now, will you be considering that as an employee benefit? Answer is yes. You will be considering that. See, it says careful judgment should be applied in assessing whether an obligation has arisen, particularly instances where the enterprise practices to provide improvements only during the collective bargaining process and not during any informal process. If the employer has not set a pattern of benefits that can be projected reliably, it will not lead to an obligation. Okay? Yeah. Now what I can do is, I understand you have some questions. Yes, over to you. Any questions, any doubts that you may have? Yes. Quickly. Yeah. I think some of you raised hands. Quickly, over to you. Any questions, any doubts on this? Please speak up. Let me just check who raised hand. I don't see anybody raising hand now. Any questions on this? Everyone clear on this? Okay, Hina has a query. Yes, Hina, please go ahead. Yes, Hina. Nisar, if you can just unmute Hina. Hina has a query.
Yes, sir. Good morning. Sir, chat is disabled. I just want to see this.
Okay, Nisar, can you please enable the chat for everyone? Nisar? Done? All right. Yeah. So I think, of course, you can just send across your queries in the chat box, but I will appreciate if you can just ask questions. Okay. So you can just speak verbally. Okay. We can discuss that. Yeah. So everyone, please confirm. Are you clear on this employer-employee relationship? Okay. Why? Because this is a very important part. So any questions, any doubts that you may have? Everyone clear so far? Any questions on this? No? Okay, so Ridhiben is clear. Then I think Navneet is clear. No questions? All right, great. So I'll just move further on this. Yeah. Okay, so now what we will do is, now we will move on to the types of employee benefits. So the standard has segregated all of these employee benefits into 4 categories. Okay, so we have 4 categories. Short-term employee benefits, post-employment. Post-employment means those benefits which are provided after the employment, means once the employee retires. Then we have other long-term employee benefits. And then we have termination. Termination means if let's suppose the employee is terminated before the normal retirement date and any benefit is payable to him. Other long term is what? You can say it's the residual category. Okay, any benefit which doesn't fall either short term, post employment or termination, that is what it falls under other long term employee benefits. Now, moving further. Now what we will do is now we will pick up each of these benefits one by one and we'll discuss the accounting requirements. Now, why is this important? Because accounting requirements for the employee benefits will be dependent on the type of employee benefit that we have. Okay, yeah. And each type of employee benefit is required to be accounted for in a different manner. So it's not something you will say is common for all the types of employee benefits, right? So now, moving on to the first one, short-term employee benefits. Now, what is a short-term employee benefits? Any benefit which is payable, or you can say which becomes due for settlement. Let me just move on to one working file. Yeah, just give me a minute. Let's suppose we have this financial year, say 24-25, right? And this is, let's suppose, the year end, 31st March 2025. And then we have next financial year ending on 31st March 2026. Now, when we are looking at the financial statements for the financial year 24-25, so let's suppose this is the reporting year. Now, in this case, if let's suppose there is any employee benefit which becomes due for settlement, means for which the amount becomes payable within 12 months from the balance sheet date. Now, what is that period? This is the period. Yeah. So we are saying any benefit which is payable within 12 months from the balance sheet date. So that is what you call as short-term employee benefit. Short-term employee benefit. Okay. Now, let's try to look at some examples for this. Very simple example for this could be salary. Okay. So let's suppose salary is payable for the month of March. So when will that be paid? April 2025. So is that amount payable within 12 months from the end of the balance sheet date? Answer is yes. So therefore, what do you call it as? Short-term employee benefit. Similarly, if let's suppose there's any bonus. So when will that be paid? Let's suppose that will be paid on Diwali. Around Diwali, it's practice of the company to pay that amount. So that is in October 2025, pertaining to which financial year? 24-25. So that is again what you call as short-term employee benefit. Clear on this? Yeah, everyone clear? What is a short-term employee benefit? Okay, so I can see one query from Hina. I'll just come to this query. Anjana has a query. Anjana is asking, sir, VRS payment. See, I'll come to all of these terms. I'm not sure where you are picking these terms from. VRS stands for Voluntary Retirement Scheme. Okay. Then I think Navneet has a query. Okay, so I think Navneet has answered this. Great. Okay, I think Harivansh has a query. Harivansh, can you please pick up? What is your query? Can you please explain? Over to you quickly. Harivansh, can you please pick up? Can you please explain what is your query? Yes, if you are around. Harivansh, are you there? Can you please pick up? Please raise your hand so that we can discuss your query. No, you're not there. Okay, great. So I think Hina has a query. Hina, can you please explain your query? Can you please pick up?
Yes, sir.
Yes.
Sir, I just, matlab, I understand the concept of contract of service and contract for services, but I just want an example for both so it gets more clear.
Okay, sure. So now, in terms of contract for service and contract for services, what I'll do is I'll just go back just to clarify this point. So let's suppose there are two arrangements. Let's suppose we have a company X Limited. Okay. Now X Limited has engaged two parties. One is, let's suppose, Ram. Now with Ram, X Limited has an arrangement. What is the arrangement? That Ram will work with the company on a full-time basis. Ram will be reporting to the company, let's suppose at 10 a.m. So that's the office hours up to 6 p.m. Okay, so the office hours are also defined. Ram will also be required to report to office on a daily basis, except for weekends. Okay, so whenever the off days are there, Ram is not required to report. Otherwise, Ram is required to report. So the place where the services are rendered, what will that be? Office. So Ram will be reporting to office. So Ram will also be taking the instructions from his reporting manager or maybe from his bosses as to how the work is required to be done, when the work is required to be done. And as of now, roles and responsibilities of Ram are defined, but each and everything is not defined. Okay, so every now and then some work may come which Ram will be required to execute. So in this case, what would you call Ram as? Can you tell me? What do you think is the role which is being played by Ram in the given example? Over to you, everyone. Tell me quickly. What do you think is the role that has been assigned to Ram? Great. Navneet says Ram appears to be an employee. Yeah. So Linga says Ram appears to be an employee. Right. Then I think Neeraj is also saying Ram appears to be an employee of the company. Yeah. All right. So I can see a similar sort of response from everyone. So I think Ashlesha has the same response. There's so many responses, right? So in this case, Ram appears to be an employee. And let's suppose X Limited has also engaged one more party. Say it is ABC and company. So ABC and company is a firm of chartered accountants. Okay. And ABC and company will also be required to render services. So ABC and company is not the auditor. ABC and company will be required to, let's suppose, render some services. Say some professional services will be rendered. Now, in both the cases, if you look at RAM as well as ABC and company, services are being rendered. Yes or no? So RAM is rendering services. ABC will also be rendering services. Correct? In both the cases, X Limited will be making some payment to the counterparty. So X Limited will make monthly payment to Ram. Let's suppose ABC is also on a retainership basis. So X Limited will also be making the payment to ABC and company. Correct. So the payment pattern is similar. Services are also, let's suppose, similar. But as far as ABC is concerned, ABC doesn't have a fixed staff for rendering services. Maybe today some person may come, maybe next month another person may come. Okay, the services which are rendered, of course, that will be decided between X and ABC, but the manner, mode, working hours, all of these things will not be working on a pattern the way they are working between X Limited and RAW. So in this case, what do you call ABC and company? Will you call it as an employee of X Limited? Answer is no. It will be considered as a consultant, or you can say advisor. Yeah. So any nomenclature you may provide to that. Yes or no? Yeah. In this case, can we say that ABC is an employee? Answer is no. So that's why arrangement between RAM and X Limited is what? It's a contract of services. And ABC and X is what? Contract for services. Yeah. Ina, clear on this?
Yes, sir, clear. Thank you.
Okay, great. Right. Okay, so Linga is saying for a person to be an employee in a company, that person needs to be on the rolls of the company. Yeah. Is this understanding correct? Of course, yes. This understanding is absolutely correct. All right, so then I can see. All right, so I can see a lot of responses over here. Okay. All right, so now moving further. So we were discussing about the employee benefit, which is short-term in nature. So we also discussed that short-term employee benefit is the one wherein the amount becomes payable within 12 months from the balance sheet date. Correct? Now, let's take up one example to discuss this. So I'll pick up one small example again from your study material only. Okay, so if you want, you can also refer the study material. I'm sure you'll be having that. Okay, so let's move on to this third illustration, question number 3. Entity XY is required to pay salary of rupees 2 crores for the financial year X1, X2. It actually paid rupees 1.9 crore up to 31st March, and the balance is payable in April X2. You are required to determine the actual cost to be recognized for the financial year X1, X2, and any amounts to be shown through the balance sheet. Over to you. Tell me quickly, how do you treat this? What type of benefit you'll call this as, and how will you record this? Over to you. Quickly, who will answer this? Yes, great. I think Radhesham will answer this. Yes, Radhesham, please go ahead. Please explain.
Good morning,
Radhe.
sir.
Yes, good morning.
Sir, the salary of 2 crore, which is payable to the person, is employee, and thus in that financial year the whole amount will be recorded.
Okay, so which financial year you think whole amount will be recorded?
Sir, 21 to 22.
Yes, X1, X2, correct?
Yes, sir.
Now, tell me further, what type of employee benefit you will call it as
So
and why?
it is short-term benefit because it is payable within a year.
Very good. It's a short-term employee benefit, but in this case, if you look at the employee benefit, it is bifurcated into two parts. So one amount or one portion is already paid and the other portion is payable. Can you see
Yes,
this? Out
yes,
of 2 crore, 1.9 is already paid and 10 lakhs is payable.
yes,
So
sir.
will you call entire amount as short term or the amount which is payable as short term?
I think, sir, the amount which is payable will be short-term.
Okay. And do you think there is any amount that will be appearing in the balance sheet?
Yes, sir. The remaining 10 lakh rupees which is not paid as
Okay.
right
So
now.
that will be appearing in the balance sheet. Correct.
Yes,
So where do you present that in the balance sheet?
sir. On liability side.
On the liability side. Very good. Yeah. All right. So great. So now in this case, it's a very simple one. 2 crore is the total amount which is payable, out of which 1.9 crore is already paid. So what is the balance amount? 10 lakhs. So 10 lakhs, because it becomes payable within 12 months. So that's why this will also be short term. And where do you present this? You will present this in the balance sheet. So this entire amount will go to P&L. Why? Because it's a cost to the company. But this 10 lakhs, because it's not yet paid, so that's why this will be appearing in the balance sheet. Clear on this? Yeah, everyone clear? Any questions, any doubts on this? I think Neeraj has raised hand. Yes, Neeraj, please go ahead. Yes, Neeraj, please go ahead. Please pick up. Yes, Neeraj, please pick up. Neeraj, you have some query? Nisar, can you please unmute Neeraj? Nisar, can you please unmute Neeraj? Neeraj, please pick up. What is your query? Neeraj, are you there? Nisar, are you there? Nisar, you're there? Yeah, Neeraj wants to speak up. I think Neeraj has a query. He has raised hand.
गुड मॉर्निंग सर।
Good morning.
सर ये पूछना था कि जो शॉर्ट टर्म है ये रिपोर्टिंग ईयर की बैलेंस शीट डेट के विथिन आता है या फिर उसके बाद आता है?
No, so every time when we are talking about any employee benefit, okay? So let me just go back to that working file. Now, what is our objective? See, our objective is to find out that in the given financial year. So what is the reporting year that we have? 24-25. Okay. So for this reporting year, we need to find out which all benefits will be recorded in the financial statements of 24-25. So when we say short-term benefit is payable within 12 months. So even though the amount is payable after the balance sheet date, when do you record it? You will record it in the reporting year. So that's why we are considering it. Understood? So in the given example, when we have a cost of 2 crore, when do you record it? You will record the entire cost in X1, X2 because X1, X2 is the reporting year. Clear? Clear on this? Yeah, Neeraj, clear on this?
यस सर, यस सर।
All right. Anyone else? Any more questions on this? Any more questions? Any more doubts if you have? Okay, so I think Sarah has a query around WhatsApp that may be looked at separately. Aditya is asking, okay, so I think Aditya is talking about long term. See, all of these benefits we'll discuss. Okay, so that is yet to be discussed. We'll talk about it slightly later. As of now, we are only looking at short term. Okay, so, okay, Ridhiben is clear on this. Great. All right. So now moving further on the short term employee benefits, we'll continue. Yeah, so there's a concept which you call as accumulating and non-accumulating. Let's try to understand this. Okay. Now, what is accumulating and what is non-accumulating? This is again very important. Okay, so I can see one query from Navneet. Navneet is asking, sir, what if 10, Navneet, can you please explain what is your query? Can you please pick up quickly? Can you please explain? Navneet, quickly, please pick up. What is your query? Okay, so he's saying there's some background noise. Okay, no worries. I'll just read this, but I'll appreciate if you speak up because then we can just understand is where you're stuck. So Navneet is asking, sir, what if 10 lakhs is to be paid in 20 into 3 minus 20 into 4? I couldn't understand this point. That means after 12 months. So again, I'm not very clear on your query. Let me just assume that you are talking about 10 lakhs is to be paid after 12 months. Okay. And this after 12 months period starts after the balance sheet date. So that means you are talking about this period, right? So when you say any benefit which is payable after 12 months from the balance sheet date, so do you call it as short term? No, that is not short term. Now, what kind of benefit is that? That could be other long term, post employment. So that is something we'll have to find out. So when we'll discuss the other types, you'll get to know about it. Okay. Now, of course, so this entire treatment, how do you record it? Where do you show this? All of these things we'll discuss. Don't worry. Yeah. So as of now, we have only discussed about the short term. In fact, on the short term part also, we are not yet completed, done. Okay. So there's still a lot of part around the short term, which is yet to be covered. Right. Okay. Then Aditya has a query. Aditya, can you please explain what is your query? Please go ahead. Please pick up.
Sir, good morning, sir.
Good morning.
Sir, my query is to become there is any quarter month comes in short term benefit, sir.
What do you mean by quarter month?
If there is any 3 months or half month, like 3 months or 6 months, like 9 months, like
Can you give me one example for this? I'm again not clear on your query.
in 3 months of short term benefit bonus comes. Likewise, that query, sir.
No, so if you look at the chart, okay, so we have this time chart available on the screen.
Yes, sir. Yes,
So
sir.
are you talking about those 3 months falling within 12 months from the balance sheet date? Is that
12
the
month
question?
12 month is shown, sir.
Right.
Hmm.
No. So again, are you talking about those 3 months which are falling within that 12-month window? So my point is, are you saying that, let's suppose this is the 3 months period. So are you saying that your 3 months period is within the 12 months period?
But 3 months period I talking.
No, so what do you mean by 3 months period? I'm not clear.
The 3 months period is there is any salary bonus comes on 3 months. Likewise,
Okay, so you're saying instead of monthly payment, if let's suppose quarterly payment is made, is it?
Yes, sir. Yes, sir. Yes.
Yeah. So as we discussed, see, the mode doesn't matter. Mode in the sense means whether it is monthly, quarterly, 6 monthly, annually, that doesn't matter.
Yes, sir. Yes.
Okay. For an employee benefit, what do you need? First step, whether employer-employee relationship is there or not.
Yes,
The
sir.
moment you say it's an employer-employee relationship, where do you take it? Employee benefit. So that
Yes,
is
sir.
the first part. Okay. And once you have the employee benefit, then your step number 2 is what? That is when you will check whether it is short term or not.
Yes, sir. Yes.
And how do you check it? It's short term. You'll find out whether it is payable within 12 months from the balance sheet date. If yes, you'll say short term. Otherwise,
Yes, sir.
you'll find out from the other types, which we have not yet discussed. Okay. So
Okay, sir.
quarterly, monthly, you should not get confused with this. It doesn't matter.
Yes, sir. Yes.
Okay.
Okay, sir. Thank you.
Great. I think Navneet is also clear on this. Okay. Then I think Ridhiben has a query. Yes, Ridhiben. Please go ahead with your query. Yeah. Ridhiben, please go ahead. What's your query? Please pick up. No, no, clear. All right, great. Any more questions on this? Everyone clear? Everyone clear now? Yeah. Okay, great. Navneet is clear. Everyone is clear. Okay, Sadi is also clear. All right. So then I'll move further. Huh? Okay. So now, continuing on the short-term employee benefits. Now, within the short-term employee benefits, we may have one more bifurcation. Now, what is that? That is of accumulating and non-accumulating short-term employee benefits. So let's try to understand about that. Okay. So now, so I'll take one example to discuss this. Okay. Excuse me. Let's suppose again we have a financial year 24-25. This is also the reporting year. Now, company has a policy. What is the policy of the company? 21 leaves are given to the employee. So every employee gets 21 days of leaves. So these are the paid leaves. So if the employee avail the leave, no salary is deducted, or you can say the salary is paid even if the leave is availed. Okay. Now, in this case, as at the year end, 31st March 2025, let's suppose policy says if the leaves are not availed, let's suppose employee has availed 15 days of leaves, 6 are pending. Okay. So what will happen to those leaves? They will lapse. They will lapse. Okay. Now, another situation is there's another employee, right? Or you can say there's another entity which has got similar sort of policy wherein the employee will get 21 days of leaves, with the difference that any leaves which are not availed by the employees during the year are carried forward to the next financial year. So let's suppose employee has 6 days of the leaves which are pending, means which have not been availed. So what can happen is employee can take this to next financial year. Okay. Now in this case, these 6 leaves can be availed by the employee in the next financial year. Correct? So in the next financial year, when the employee will avail the leave, you will also be getting the salary for this. Correct? This is what you call as accumulating short-term employee benefit. Why? Because these are getting accumulated and carried forward to the next financial year. So these are accumulating. So these are the ones which are accumulating. As against that, if let's suppose leaves are not allowed to be carried forward, the first example that we looked at, in which case the company has a policy that any unavailed leaves will lapse, right? So what do you call it as? Non-accumulating. Non-accumulating. Understood the difference between these two? What is accumulating and what is non-accumulating? Yeah, everyone clear? What is accumulating? What is non-accumulating? See, this is important. Why? Because accordingly, accounting treatment will also be required for the accumulating or the non-accumulating. Yeah. So, okay, great. Prerna, Neeraj, everyone is clear on this. Great. All right. So now why is this important? And how does it really matter as far as its accounting is concerned? Navneet is asking, sir, accumulating में carry forward add नहीं होगा? See, because it's a carry forward, that's why you are calling it as accumulating. Okay. So to say it will not be added is not correct. Because it will be added, that's why it's called as accumulating. So of course that will be added. Clear, Navneet? Okay. Yeah. All right. So now, yes, Meenu has a query. Meenu, can you please explain your query? What is your query? Yes, over to you. Meenu, can you please explain what is your query?
Good morning, sir.
Good morning.
Sir, I am asking here if employee not use 6 days leave
Yes.
and carry forward to next year, so it is accumulated, right?
Right.
And if he not carry forward 6 days leave, then it will be non-accumulated.
Correct. If you say the company has a policy that the leaves will lapse, then it is non-accumulating.
Thank you,
Okay.
sir.
All right. Great. Okay. So any more questions on this? Okay. Anjana is saying leaves are carried forward and that's why it is called as accumulating. Yes, that's correct. Okay. Now, why is this important and why is this relevant at all for the purposes of our discussion in relation to short-term employee benefits? See, if let's suppose there are leaves, 6, which are not yet availed by the employee, correct? And which will accumulate and which will be carried forward to the next financial year. So it will not go beyond the next, correct? It's a cost to the employer. And when is that cost payable? As and when the leaves are availed, which is within a period of 12 months from the balance sheet date. Correct? It's a period of 12 months from the balance sheet date. So that's why, what do you call it as? Short-term employee benefit. Short-term employee benefit. So this will also be required to be recorded as what? As a short-term employee benefit. Okay. So I can see some background noise. I would request everyone to please stay on mute. Yeah. Okay, great. Now what we can do is we can just pick up an example. And with the help of that example, we'll just try to discuss the accounting requirement as well. Okay. Okay, so what I've done is I've picked up one example from the study material itself. Right, so if you want, you can also refer the study material, but I'll just discuss it over here. Good example, and we'll just try to get some more clarity with the help of this. Okay. All right, so now an entity has 100 employees who are each entitled to 5 working days of leaves each year. So let me just put it down over here. Entity has 100 employees. They have an entitlement of what? 5 working days of sick leave each year. So let's say this is the year. So what do they get? 100 employees, each getting 5 days. The policy says unused leave may be carried forward for 1 calendar year. So we have this reporting year as the calendar year. So let's suppose this is 31st December 2024. Yeah. So this is 31st December 2024. So this can be carried forward to next calendar year, 31st December 2025. Let's suppose calendar year is also the reporting year. Policy says leave is taken first out of current year's entitlement and then out of any balance brought forward from previous year. So LIFO basis is required to be applied. Okay. So next year. So what is our reporting year? Can you tell me quickly? In this case, what is our reporting year? Over to you quickly. What is the reporting year? Quickly tell me, what will you take as the reporting year? No. So Neeraj says 24, 25. No, our reporting year is the calendar year. So the year ended 31st December 2024. So this is our reporting year. Okay. Clear? Everyone clear? What is our reporting year? 31st December 2020. It's not 23, 24. I can see a lot of responses are 23, 24. That is wrong. Okay. It is year ended on 31st December 2024. Everyone clear on this? Yeah, everyone clear? It is January to December. Yeah. Great. I can now see Navneet is saying yes, clear. I can see Harivansh is now clear on this. Great. Anjana is also clear. All right. So now, see, that part is important because that sort of confusion you may have in the question also. And that is where you may go wrong. Okay. Yeah. So that is again important. Right. So now, policy says next year. Okay. So we are talking about this year now. When the leaves are availed, so what will happen? First of all, leaves will be availed from the current year's entitlement. So next year again, employee will have an entitlement of 5 days. Each year employee will get 5 days. Yes or no? So every time the leaves are availed, it will you first of all be picked up from the current year's entitlement. And if let's suppose current year entitlement is not sufficient, then you will pick up the carry forward balance. So that's what the policy says. last in first out. So that's why it is called as LIFO. Clear? Now, as at 31st December 2024. In fact, let me just take you to the question also. Okay, so we can just read the question and then we can just come back to this, right? The leave is taken first out of current year's entitlement and then out of any balance brought forward from the previous year. Now, as at 31st December 2000 X4, average unused entitlement is what? 2 days per employee. Entity expects, based on past experience, which is expected to continue, that 92 employees will take no more than 5 days of leaves in X5 and remaining 8 employees will take an average of 6.5 days each. Okay. Yeah. So this is the fact pattern. So let me just put it down on that chart as well. So now as per the policy, if you go, what has happened? Out of 5 days, 2 days are unavailed. 2 days are unavailed. And what is the expectation of the entity? Out of 100 employees, 92 out of 100, 92 employees will avail no more than 5 days of leaves in X5. Means in 2025. And remaining 8 employees. Okay, so 92 will avail how many? 5. And remaining 8 employees will avail 6.5 days of leaves in the next year. Next year means year ending 31st December 25. In this case, what do you think will be the amount of liability that the entity needs to recognize during the reporting year? Over to you. Over to you. What do you think will be the liability that the entity needs to recognize during the reporting year? So we are talking about reporting year. Quickly, who will answer this? Everyone. Over to you quickly. Who will answer this? Yes, quickly. What is your thought? What do you think? How should this be recorded by the entity? Okay. Ashlesha is saying, sir, please show the question. See, the question is there in front of you. I put down the entire fact pattern on the screen itself. Huh? So if you want to read the question, you can just go refer study material also. Okay. Otherwise, I have to just keep switching. Huh? Yes, who will answer this quickly? What is your thought? Okay, Anil has answered this. Very good. Anil says, for 92 employees, 2 days should be recorded. And for 8 employees, 6.5 days should be recorded. Okay. All right. What about others? Meenu says, first 92 days reported, then 8 employees. I'm not clear. What do you mean by reported? Okay, Anjana says 8 employees will avail the past year leave 1.5 days. No, so how do you record it? So that's the question, Anjana. How will you record it? Okay, great. Harsh says for 8 employees, you will record 1.5 days of liability. Shamli says 12 days liability you will record. Why? Because 1.5 days leaves will be required for 8 employees. So that's how you get 12 days liability. Okay. What about others? Quickly, everyone. Okay. Kushi is saying, sir, how can we record estimated days? So you just don't have the amount right now. Okay. So in terms of days, you need to tell me. Okay. Anjana says outstanding liability. No. So I think you are talking about the presentation. So I'm not talking about the presentation right now. I'm just talking about the amount, or you can say as to how will you record it. It's not only the presentation, it's also about the recognition. So how do you recognize it? What do you measure? Yeah. So I think Navneet has the same answer. 12 days of liability you'll have to record. Very good. Then I think Chandan is saying, sir, we'll record for 8 employees. Okay. For 8 employees, what do you record? That is again a question. Yes, quickly. Everyone, what about others? How do you record it? Okay, then I think Khushi has the same answer. 12 days will be recorded. 12 days is what you will record. So let's look at this, right? So in this case, what do you do? In this case, you'll have to assess as to what is going to be the amount of liability on the part of the company. I think Khushbu has the same answer, 12 days. So let's try to understand this, right? See, in this case, how many employees do we have? 100. Yeah, so let's look at it one by one. So we have got 100 employees, correct? Out of 100, 92 employees are expected that out of 2 plus 5 days. Next year, what is their entitlement? 5. So how many leaves will those employees have in the next year? 2, they will carry forward. 5, they will get in the next year. So total leaves they will have is 7 days. How many leaves they will avail next year? Tell me, how many leaves they will avail next year? How many leaves they will avail next year? They will avail 5 days. Yes or no? They will avail 5 days. Next year, I'm talking about how many leaves they will avail next year. That will be 5 days, correct? So when they avail 5 days, so that will be used first of all from their quota of next year. Yes or no? That will be used from their quota of next year. Correct? So that means these 2 days of leaves which they will carry forward, this will lapse next year. Next year it will lapse. So do we need to do anything about these 2 days for 92 employees? Answer is no. Okay, so for 192 employees, 2 days which they carry forward, what do we do? We ignore it. We ignore it. Correct? Now, what about remaining 8 employees? So they will also have 2 days, right? So next year, what will happen with these 8 employees? These 8 employees are expected to avail how many leaves? 6.5. So it is expected that they will avail 6.5 days of leaves. So when they will avail 6.5, where will it come from first? First of all, it will come from current year's quota. So current year's quota is gone. Still, they will need 1.5 days. So where will that 1.5 come from? These 2 days. These 2 days which are carried forward. Yes or no? Yeah. So as a result, what will happen? Out of 2, 1.5 will go there, right? And remaining 0.5, what will happen to that? That will also lapse. So you need to ignore that. So that's why, what should you do? For these 8 employees, 1.5, which is expected to be carried forward and utilized in the next year, that is what you will record during the reporting year. So during the reporting year, for 8 employees, 1.5 days of leaves. Again, the amount is not given. So that's why, what will you do? You will record a liability for these employees for 1.5 day each. Clear? Everyone clear on this? Yeah? Everyone clear? Any questions, any doubts that you may have, please let me know. See, it's I would say, a simple example, but it becomes slightly tricky if you are not clear on the concept. Okay, so any questions, any doubts that you may have? Prerna is clear. Aditya is saying, sir, 21 days and 5 days of last year's. Aditya, please raise your hand if you have any query. I'm not clear on your query. Yes, quickly. Yes, Aditya, please go ahead. What is your query?
Sir, if the employee has in year 21 days have a leave, sir.
Right.
But he takes only 5 days, 6 days in 1 year, sir.
Right.
After next year, it may carry for 21 with 6 with other leaves, sir, not, sir.
See, that will be dependent on the policy of the company. So every
Yes, sir,
time
yes.
you'll have to find out what is the policy of the company. Okay. So accounting standard will not tell you the leaves policy, because leaves policy will be decided by each and every organization.
Yes, sir,
Accounting
yes.
standard will tell you, depending on the policy that you have, what is the accounting that you need to do. Clear?
It is depends on organization, sir.
Yes. Each and every organization may have different policy.
Yes, sir,
Right?
yes. Yes, sir.
Great.
Okay, sir.
Oh, great. Then I think Radhesham has a query. Yes, Radhesham. Radhesham Tiwari, you have a query? Yes, Radhesham. Please go ahead. What is your query? Please pick up. Yes, Radhesham. Please go ahead.
Good morning, sir.
Good morning.
Sir, I wanted to ask that if the rest of the 92 employees also have availed the 2 days leave, which was available to them, will the company has to record the 200 days liability?
See, that will again be dependent on the expectation of the entity. So if you look at the current question, in the current question, we are told that 92 employees are not expected to be utilizing those 2 days. Yes or no? So that's the expectation. They will not be able to utilize. So that's why we are not recording it. But if, let's suppose, entity expects that 92 employees will be utilizing these 2 days, then of course, for 92 employees, 2 days will have to be recorded.
Okay, and sir, if they do not avail the last year's leave in this year, so it will be lapsed for the next year?
See, that is again dependent on the policy of the company. So there are two different aspects here. Let's be very clear on that. When you look at the leaves policy, who will decide that? It will be decided by the organization. So accounting standard doesn't give you the guidance. What should be the leave policy of the company? All of these are what? These are HR policies. Okay. So
Yes.
any organization may have any policy as far as any employee benefit is concerned. Forget about leaves. Let's talk about any employee benefit. Okay. So every organization will decide it on their own. Accounting standard has no role to play on that. So when do you apply the accounting standard? When you have once you have a policy in place to do the accounting. Okay, so we should not be expecting the accounting standard to answer this question. So that's why you should not get confused. Okay,
Yes, sir.
clear? Yeah.
Yes,
So
sir.
policy will be given to you in the question. You will not be required to decide the policy of the company.
Okay.
Depending on the policy, you will be required to answer on the accounting treatment. Clear?
Yes, sir. Thank you, sir.
Sure. Okay, so then I think Harivansh has a query. Yes, Harivansh, please go ahead. What is your query? Harivansh, please go ahead. Please pick up.
गुड मॉर्निंग सर।
Good morning.
सर मैं ये समझ नहीं पा रहा हूँ कि जो आप 1.5 आवर्स जो आपने मतलब कि 1.5 डेज जो है वो तो पिछले साल का 2 डेज का तो बाकी था ना मेरा मतलब लीव्स।
Right.
तो वो अगले साल में जो बाकी था तो वो 1.5 जो कटा फिर वो मेरा लायबिलिटी में क्यों गया?
So 1.5 is not deducted. See, in the year ended 31st December 2024, are you talking about 8 employees or 100 employees?
8 employees.
8 employees. How many leaves they will carry forward? 2.
2.
Okay.
Yes.
Now, what is the expectation of the organization that out of these 2 leaves, which the employee is carrying forward, employee will be able to utilize only 1.5? Yes or no?
Yes, sir.
So remaining 0.5 will lapse. So do we need to do anything on the leaves which are expected to lapse? No. So that's why we are ignoring 0.5 days. Even if that is carried forward, because that will lapse, so we are ignoring it. Yeah, so this part is clear why we are ignoring 0.5.
Yes, sir.
Okay, now let's talk about 1.5. Next year, employee will avail 1.5 days of leaves and will get the salary also. So that's why entity will have to pay to the 8 employees for 1.5 days. Right? So should that be recorded as an expense? Answer is yes. Should that be recorded as short term? Answer is yes. Why? Because this will be utilized in the next year, which is 12 months from the balance sheet date. Now clear on this? Now clear?
Yes, sir.
Okay, great. Then I think Minu has a query. Yes, Minu, please go ahead. What is your query? Minu, please go ahead. Minu, over to you.
Yes, sir. Sir, I'm
Yes.
going to summarize here, and you have to tell me that I'm correct or not. Okay.
Okay, great.
So it means that it is a LIFO method. So okay, यहाँ पे company avail 5 days leave. Okay, and if it is not meet, then we will use a reporting here carry as a carry forward day will be utilized.
No, I'm not clear as to what is it that you have summarized.
Okay, let me restate. I'm telling you here that you say that it is LIFO method.
Right.
If so it's mean that company availed 5 days leave in the next year, and
Right.
if it is not made, then reporting year carry forward days will be utilized here.
Correct.
Okay.
Okay. That's correct.
And my second doubt is if it is FIFO method, then we use first 2 days and then we use 5 days. Okay.
That's correct.
For 92 days we will use 2 days here and 3 days from the next year. Okay, and for
Right.
8 employees we will use here 1.5 sorry 2 days, and the next year we will use 4.5 days.
That's correct.
Okay, that's my doubt, and I'm going to ask. Yeah.
Okay, great. Clear on this now?
Yes, I'm clear.
Okay, very good. Yeah.
Thank you.
So great. So I think Khushi has a query. Yes, Khushi, please go ahead. Khushi, I think you have some query. Are you clear on this, Khushi? Okay, then I think Navneet is clear. Great. Anyone else? Any more questions on this? No? So I think Khushi is clear on this. Okay, Radhesham Tiwari has a query. Yes, Radhesham, please go ahead. What is your query? Radhesham, please go ahead. Please pick up.
Sir, my query is already solved, sir.
Okay, great.
Yes.
Neeraj has a query. Yes, Neeraj, please go ahead. Neeraj, what is your query? Okay, Khushi is clear. Khushi was just, sort of explaining as to what has been discussed. I think Neeraj is also clear on this. Neeraj, please explain. So if you have any query, if I'm not clear. So what is your query? Yes, quickly. Are you clear on this? Yeah. All right. So, okay, great. Neeraj is also clear. All right. So I think, so what we can do now is we can take a break. Yeah. So let's continue on our discussion after the break, right? All right. Hi, welcome back. So let's continue on our discussion. So we were discussing about short-term employee benefits. Okay. So we'll continue on this piece. Now, as regards short-term employee benefits, some of the examples that we picked up salary, then we picked up this leaves. Okay, now leaves again. It's again every time we need to find out whether the short-term employee benefit is accumulating in nature or non-accumulating in nature. Why? Because depending on that, you have seen the accounting may also be varying. Okay, so now let's look at some more examples for this and some more items which may get covered within this short-term accumulating benefits itself, right? So now if you talk about some other benefits, so that could include any bonus. Okay, so if let's suppose entity has an amount in the form of bonus payable to the employees, so just because it is bonus, or let's suppose there is some basis for calculation of bonus, let's suppose it's based on the profits of the company, or maybe based on some other parameter, will you say it's sort of other type of employee benefit and which will not fall within the short term? Answer is no. See, as far as the employee benefit is concerned, it doesn't matter as to what is the nature. The moment you say it's an employee benefit, it will have to be recorded. The only thing that we need to find out is the categories. And here again, if let's suppose there is any bonus, and if that happens to be a short-term employee benefit, so it will have to be recorded the way we have discussed. As simple as that, right? Now, in this case, I think we can take this small example. A profit sharing plan requires an entity to pay a specified proportion of its net profits for the year to employees who served throughout the year. So generally, this is how variable bonus works. If no employees leave during the year, total profit sharing payments for the year will be 3% of the net profit. Entity estimates that the staff turnover will reduce the payments to 2%, 2.5% of the net profits. In this case, what should the entity do? Entity will have to record this. But the question arises, should the entity record this expense for 3% or 2.5%? See, for the employees who are not going to serve the company, will this amount be payable to them? Answer is no. So that's why we should not be recording the expense for those employees who are not expected to be there with the company. So that's why what do? You will record this expense for 2.5, something which Kuldeep also mentioned. Great. Okay. Now, let's look at one more example. Yeah, a small one. All right, so let's look at this one. In case, so we are picking up this question number 5 now. Okay. In case an entity allows unutilized employee benefits, for example, medical care, leave travel, to be carried forward. Okay, let's suppose there is some employee benefit which is in the nature of medical care, leave travel, all of these, right? And what's the policy of the company? That the employee can carry forward these benefits. And I'm just hoping you're clear on the carry forward. Huh? Now the question arises that the benefit has been carried forward, that has not been availed by the employees during the reporting year. Now the question arises whether the entity should create a provision, means should record such an expense, during the reporting year itself or not? Over to you. What do you think? What do you think? How will you treat this? How will you record this? Yes, quickly, over to you. Everyone, what do you think? What should be the accounting treatment here? I think we have discussed this quite a lot before the break. Yes, tell me, how should this be recorded? What should be the accounting treatment? Quickly, anyone? How will you record this? Yes, who will answer this? Okay, so let me just explain this again. I'm not sure as to why we have not been able to pick this up. Okay, so great. I think Anil is there. Yes, Anil, please go ahead. What do you think? How should this be recorded? I think Ashlesha has also answered. Ashlesha says, yes, this provision should be made. Very good. Anil says, it should be recorded as a short-term employee benefit. And again, because it seems there is some confusion, so that's why I'll explain this question to you. It's a simple one and very much on the lines that we just discussed. Maybe the language is bothering you, right? So in this case, the question is asking that there is an employee benefit. So let's suppose this is 24-25. This is the reporting year. So the question says there is an employee benefit. Whatever is the employee benefit. What is the policy of the company? If you don't avail, you carry it forward to next year. Right? Now the question arises, should this employee benefit, which will be carried forward to next year? So this will be carried forward to next year. Should this be recorded in the reporting year itself? Or should this be recorded in the next year? So this is next year. Now clear on the question. I think now you will be able to answer this faster. And I can see responses coming up now. Very good. I think we have already discussed this. Prerna is saying unutilized is outstanding, which is true. Shamli says, yes, we will record this in the reporting year itself. And this is what we have done so far. Yeah. Kuldeep says, yes, it will be recorded as a liability. Of course, yes. See, in this case, this expense is incurred in which year? 24-25. Why? Because employee has rendered services against which employee has earned an employee benefit. So it's a cost to the company. Employee has not availed this, but employee has earned this or not. Yeah. The moment you say employee has earned, what does it mean? Company has incurred this cost. So when do you record the cost? When it is incurred or when it is availed? When it is incurred. So that's why in which year you will record this? You will record this in 24-25. You will not move this to 25-26. Correct? Clear on this? Yeah. So this is exactly what we discussed in some of the examples when we picked up those leaves which were carried forward. So it is very much on the similar lines. The question is that it is not necessary that you will have leaves which are carried forward. It may be related to any benefit. Yeah. Important point for you to understand is what is the policy of the company. And accordingly, you will decide the accounting treatment of such employee benefit. Okay. Clear? Everyone? With this, we are through on the short-term employee benefits. Right? Now, any questions, any doubts that you may have, as around the short-term employee benefits, please let me know. Then we'll move on to the next type. If you think there is any question, any doubt related to short-term, we can discuss. Otherwise, we'll move on to the next type. That is post-employment employee benefits. Neeraj is clear? Great. I'm just hoping everyone is clear. Yeah, everyone clear? Great. All right. So now, moving on to the next one. Post-employment, right? Post-employment employee benefits. Now let's try to understand what are post-employment employee benefits. Okay. This, I would say, this particular category happens to be the most important one. Why? Because if you look at the accounting treatment for this particular category, that is not as simple as what we have discussed in case of short term. And similarly, when we'll move on to the other categories, other long-term termination, there again you will find the accounting requirement is very straightforward, very simple one. But in this case, you will not find that to be the one which is that you have for short-term, other long-term or termination. This is slightly typical. And this happens to be the most important part of the standard. So now what is post-employment? As the terminology suggests, any employee benefit which is payable to the employee at the time of his or her retirement. Okay. At the time of his or her retirement. Can you give me some examples of the employee benefits which are payable at the time of retirement? Here I'll have to come to your query slightly later now. Yeah, so let's talk about post-employment. Yeah, any examples that come to your mind in relation to employee benefits which are payable at the time of retirement? Great. Navneet says pension. Yes, very good. Gratuity. Yes, very good. What about others? Any example? Harivan says EPF. See, EPF, I would say is something, yes, that can be sort of, you can say partially withdrawn. So maybe that's why you're saying. Ashlesha says gratuity. Yes. Kuldeep says pension could be there, medical benefits could be there, gratuity could be there. Yes. Yeah. Great. So good. You have shared a lot of examples. Good. Right. So I can see a lot of responses on Shamli, Ridiben, they have shared. All right. So now we have a situation, something like this. Say our reporting year is 24-25 again. Okay. And when is the benefit payable? At the time of retirement. Let's suppose retirement will happen after 10 years. It may happen after 15 years for some of the employees. After 20 years for some of the employees. Means sometime in future, this is payable. Okay. Now, there are two parts to it. Okay, so when we talk about post-employment employee benefits, again, there are two parts to it. So let's understand both of them one by one, right? So one is called as defined contribution plan. Defined contribution plan, DCP. Other one is called as defined benefit plans, which is DBP. Okay. Now, in this case, what I'll do is I'll take one example of an employee benefit, and with the help of that example, we'll try to understand. Say, company has a policy to pay pension. Okay. Company has a policy to pay pension to its employees. Now, can we say it's an employee benefit? So again, what we will do is we'll just go step by step, right? So every time, whenever there's any benefit, what do we need to find out whether it's an employee benefit or not? That's step number one. Please don't forget. When you'll say it's an employee benefit, that is when you will check under which category you will take it: short-term, post-employment, other long-term, or termination. So pension, will you call it as an employee benefit? Answer is yes. Okay, now, in relation to this employee benefit pension, two types of arrangements are possible. What is the first arrangement? See, every year, because the employee is rendering services, yeah, so that's why what will the employer do? Employer will contribute the amount. Why? Because this pension is payable to the employee. So every year, employee is rendering services. In return for that, payment is not made to the employee each year. Payment will be made to the employee, let's suppose, at the end of 20th year, when the employee retires. Correct? So what will the employer do? Employer will have to create a provision. Yes. Employer will have to record a liability. Okay. And when the employer will be recording this amount, so you can say it's a sort of reserve which the employer will create. It's a fund which the employer will create each year. So generally, what the employer will do is, employer will park this fund with a third party. Okay. Employer will park this fund with a third party each year. So let's suppose each year 100 is the contribution which the employer makes. Right? Each year, what is the contribution? 100. So over the period of 20 years, the amount will accumulate, and towards the fund where the employer is making the contribution, government also has got some norms. Some return is required to be in place. Okay, some fixed return government will specify that this should be the amount of return. Okay, or let's suppose this PF, Provident Fund. Okay, so every year what will happen? Employer will make the contribution, and whatever contribution employer will make, on that contribution, some fixed return is required to be generated, which is specified by the government. Yeah, that's the minimum amount which is payable to the employee at the time of retirement over here. Now, in the first case, what the employer has done is there are some recognized provident fund, government recognized provident fund. So employer has selected government recognized provident fund. So each year what the employer will do is employer will contribute this fixed amount to the government recognized provident fund. Okay. Now, at the end of 20th year, let's suppose some amount is payable to the employee. Let's suppose that amount is X. Okay, X is the amount which is payable to the employee. But the fund has got only X minus 1. Why? Because the required returns which were legally required to be paid, okay, on the basis of the contribution plus the return on that. So the returns have not been sufficient. So what is the amount payable? X. And what is the balance in the fund? X minus 1. Now in this case, there's a shortfall. Yes or no? In this case, there's a shortfall. Tell me. Quickly, do you find there's a shortfall in the given case? Right? Kuldeep says, yes, there's a shortfall. Now, in this case, the question arises that if, let's suppose, there's a future liability which is required to be paid to the employee, and that future liability will not fall on the employer. So who will bear that liability? Third party. Okay, so who will bear that liability? Third party. So in the given case, each year, what is the liability of the employer? To contribute to the government recognized provident fund. Once that is done, liability of the employer is over. Later on, if the fund doesn't have the adequate balance, will that liability fall on the employer? No. That will have to be taken care of by that fund. Okay, that will have to be taken care of by that fund. Liable employer will not be liable for that. That risk on the part of employer is gone. Once the contribution is made, employer's risk is gone. Employer is risk free. That is what you call as defined contribution plan. Clear? That is what you call as a defined contribution plan. In this case, you must be thinking, sir, who will bear the shortfall then? It will be borne by the government. Yeah, because the government is maintaining this fund. Contribution is through the employer, but the returns which are supposed to be generated, if that is falling short of what is required to be paid to the employee, who will bear that? It will not be borne by the employer. No, it will be borne by the one who is maintaining that fund. Clear? So this is what you call as a defined contribution plan. Everyone clear? What is the understanding around a defined contribution plan? So in case of defined contribution plan, once the contribution is made, on the part of the employer, no further liability in future will fall on the employer. So it's like once the contribution is made, it's done. Once the contribution is made, it's done. Clear on this? Simple, easy one, right? Great. Kuldeep says, in this case, company is liable to the extent of amount of contribution. Yes. Nothing beyond that. Right? Right? Okay, great. Okay. Linga is also clear on this. Any questions on this? Shamli is also clear on this. Right? Everyone clear? All right. So now, now let's pick up another type of arrangement. Now, what is that? Defined benefit plan. Okay. Now, what is the other arrangement? Defined benefit plan. Now, what do you mean by defined benefit plan? So we'll pick up the same example and we'll try to understand as to what is the different arrangement. Here again, each year employee is rendering services. Each year. Okay. And again, we are talking about PF, Provident Fund, which is payable to the employee at the end of 20th year. In this case, what the employer has done is, employer has got its own provident fund. Okay. So employer is maintaining its own provident fund. Who is maintaining that? Employer is maintaining that. So it's a separate fund, separate from the company. So we are not saying it's a part of the company, separate from the company. But who is managing that? Who is maintaining that? It's not the one which is maintained by the government. It's the private one. You can say it's a private one, correct? Which is sort of taken care of by the employer. So now in this case, in a similar way, employer is making a contribution of 100 each year. And here again, the amount which is payable to the employee at the end of 20th year is X. But in this case, at the end of 20th year, there is a shortfall in the fund. It is X minus 1. Here again, there is a shortfall. Okay. Now the question arises that each year employer was making the contribution. Okay. So as far as the contribution is concerned, there is no default on the part of the employer. Employer has not defaulted on that. But over the period, there are some norms, okay, on the basis of which some minimum return is expected to be generated on the fund balance. Let's suppose government has specified it is 8%. Let's suppose, assuming, and that is the return which is required to be paid to the employee also. And it's a sort of statutory requirement. But the fund has not been able to generate that much return. And that's why this amount falls short. Okay. Now the question arises that even though the contribution is made by the employer each year, at the end or at the time of retirement, if there is any shortfall, who will bear that liability? Whether the employer will carry that risk? In this case, the answer is yes. In this case, it's a privately managed provident fund. Who is managing that? Who is maintaining that? Employer. Who is maintaining that? Employer. So that's why any shortfall that arises in the given situation, any shortfall that arises, who will bear that? So that shortfall will have to be borne by the employer. In the given case, who will bear the shortfall? That shortfall will be borne by the employer, right? So that's why such type of employee benefit, in which case any future liability falls on the employer. Risk around any such shortfall continues to remain with the employer. What do you call it as? Defined benefit plan. Even though the contribution is made each year, the risk continues to remain with the employer. Unlike what we had in case of defined contribution plan, in which case once the contribution is done, the risk is gone, future liability will not fall on the employer. But in case of defined benefit plan, even if the contributions are made each year, future liability risk continues to remain with the employer. And that's why these are called as defined benefit plans. Clear on this? Everyone, quickly. Any questions, any doubts that you may have? Let's discuss that. See, this is an important one. So any questions, any doubts? Yes, so I think Anil is clear. Anil has just explained this. Great. Neeraj is clear. What about others? Shlesha is also clear. Very good. Linga is also clear. Kuldeep is saying that DBP is more risky. Yes. See, the risk is there. That is why you are calling it as a defined benefit plan. Okay. Shamli is clear. Okay, great. Meenu is also clear on this. Aditya is also clear. Any questions, any doubts? Hiram is also clear. Right? Hiram, as around your query on the short term, let's move it to the end of the session. So once we'll wrap it up, that's when we can discuss. I think Khushi has a query. Yes, Khushi, please go ahead. What is your query? Khushi, please explain. Yes, please pick up.
Sir, I had a doubt what will be the case if the employee leaves the organization before the end of the retirement period?
There again, you'll have to understand the nature of the employee benefit, or I should say the policy. See, if the employee leaves the organization before the retirement date, then some benefit will be payable to him at the time of his retirement. See, there are two ways to look at it. Say the normal retirement age is what? 60 years. And the employee continues to serve till 60 years. And some benefit which will be payable to him at the time when the employee retires, means once he achieves 60 years. So will that fall within the purview of post-employment employee benefit? Answer is yes. Another example. Let's suppose retirement age is 60 years. Employee has completed 50 years and now he has left. Okay. Now, any employee benefit which is payable to the employee at the time of his retirement. Okay. At the time of his retirement, which is what? Now 50 years. That will also be a post-employment employee benefit. Means after employment is completed, maybe his retirement date is gone, or you can say he has achieved that, or maybe he has left before his retirement date. It doesn't matter. Both of them will fall within the purview of post-employment employee benefit. Okay. But there could be one more scenario wherein the employee is terminated. That will not fall within this. Clear? Kushi, clear on this now?
Yes, sir, got it. And sir, what will be the treatment of amount? Will it be according to the organization's policy?
Yes. So I think you're talking about the accounting treatment. So how should we record both of them? Yes or no? post-employment employee benefit. That will again be dependent on whether it's a defined contribution plan or a defined benefit plan. So accounting treatment of both of them we will discuss. Okay, we have not yet touched upon that.
Okay, sir. Thank you.
All right. All right. Any more questions? Aditya, yes, please go ahead. What is your query?
Sir, in organization, there is any government benefit of that organization, sir? In private?
Sorry?
In organization, no NPS they may give after the retirement of the employee, sir. NPS leave encashment. There is any facility for leave encashment reimbursement? That is facilities on organization, sir.
Yes, of course. See, as I have clarified, I think this seems to be a confusion amongst many of you. Every organization may decide what type of employee benefit they want to provide. Okay, let's try to be clear as to what is our role. See, we are accountants. Yes or no?
Yes,
what is
sir.
our role? We are accountants.
Yes.
Our role is to do the accounting. That's it. Accounting will be done on the basis of the policy of the company or the employee benefit which the company provides. Yes or no?
Yes, sir.
So when do we get into the picture? Once the transaction is completed, once the arrangement is entered into. So our role is just to record it the way it has been done.
Yes, sir.
Now to say that how it should be done or whether this benefit should be given or not is not the role of accountant. Who will decide this? That will be decided by the company. Management will decide that. Okay, management will structure that. So the management can provide any type of employee benefit to any of its employees.
Yes, sir.
Accounting standard has no say on that. Clear on this?
Clear, sir. Clear.
Yeah. Great. So Kuldeep has a query. Yes, Kuldeep, please go ahead. What is your query? Kuldeep, please go ahead. Yes.
Good morning.
Yeah, good morning.
Sir, this DCP and this defined benefit plan or contribution plan has to be calculated for every employee, or this done in average number of employee, or question will come based on the average number of employee, right?
No. So there's no specified formula as such that the question will talk about average employees. See, every time you'll have a question. So question will specify its requirement. Question could be there for one employee, or question may ask you to compute this or suggest the accounting treatment for all the employees. Okay, so as far as the number of employees is concerned, there is no capping. And does it really matter? The answer is again no. Why? Because you need to understand the principle.
Okay.
Okay, let's understand this with the help of an example. When we talked about leave encashment, okay, the leaves which are unavailed, right? So in that case, what did we discuss? We discussed the concept that if there is any unavailed leave and if that is expected to be availed, then it should be recorded. Yes or no?
Yes, yes.
And that is why we recorded 1.5 days of leaves instead of 2. Remember that example?
Yes, 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 yes.
Does it matter to us that we need to record that 1.5 for one employee or 8 employees or 100 employees or 500 employees? Does it matter to us? Tell me. It doesn't matter.
No,
It doesn't
yeah.
matter. Why? Because we need to be conceptually clear that these many days need to be recorded. If we understand that these many days will be availed by 5 employees, we'll multiply that with 5. If that is available only to one employee, we'll multiply with 1. If that is available to 100 employees, you will multiply with 100. Yes or no? This is what you will do.
Yes, yes.
Yeah. So that's why I'm saying you need to be conceptually clear on the accounting treatment of each and every type of employee benefit. Once you have
Correct.
that, number of employees will not bother you, or that should not bother you. You should not be concerned that, sir, for one I can do it easily. If there will be many, I'll have to do some averaging. Do you do that averaging? No, you don't do the averaging. So there's no role of average here.
Okay.
Clear?
Okay,
Clear
got
on
it.
this?
Got it.
Yeah? Great.
Thank you.
Sure. Okay, so then I think Navneet is this clear? Right. Okay. Ashlesha. Okay, Ashlesha is also clear on this further. Right. Okay. So now let's quickly talk about the accounting treatment. So what we will do is we will first of all discuss the accounting treatment for defined benefit, defined contribution plan. See, the accounting treatment for defined contribution plan is very simple. What is that? Each year, the contribution that is payable, that will be recorded as an expense. Simple accounting treatment. In case of defined contribution plan, what is the obligation on the part of the employer? To pay the contribution, and that is done. Yes or no? That's the obligation, to pay the contribution, and it is done, right? So that's why, how will you record this? How will the entity record this? Entity will record the contribution payable or paid as an expense, and that's it. Okay. So as far as a defined contribution plan is concerned, its accounting treatment we can see is very simple. Correct? Now, let's talk about defined benefit plan. Now, in relation to defined benefit plan, see, its accounting treatment is quite detailed, and will not be able to wrap up our discussion on the defined benefit plan today itself. So what I'll do is I'll first of all try to explain you as to how do you work it out conceptually. Okay. And then of course, in further details, we'll continue on that. Now in this case, let's try to understand. In case of defined benefit plan, there could be various components of the cost which the employer will have to record each year. Yeah. So now what do you mean by that? Now, employee benefit, let's suppose, will be payable in year 20. Okay. So each year, when the employee will render services, let's suppose we are talking about gratuity now. So gratuity, you can say, is a kind of employee benefit. Okay. And when is that payable? That is payable at the time of retirement. In the given example, we have considered the retirement age to be 20th year. Okay. So that's the year when this falls. Okay. Or you can say that is when it is payable. Now there are two parts to it. Now this is important, and that's why I'll need your attention. See, there are two parts to this gratuity employee benefit. Each year, employee will render services. Yes or no? Employee will be working for the next 20 years with the organization. Will the organization pay him the amount of gratuity each year? Answer is no. Answer is no. Why? Because each year, this amount is not payable. Means cash outflow will not happen. When is this payable? At the end of 20th year. Over here. So actual cash outflow on the part of the employer will take place at the end of year 20. But because the employee is rendering services each year, is the employee earning the amount of gratuity or not? Tell me. Is the employee earning the amount of gratuity or not? Maybe he is not receiving that in cash. Why? Because that is receivable at the end of 20th year. But is that earned by the employee? Answer is yes. That is earned by the employee each year. Or we can say this cost is incurred by the employer each year. Yeah. So let's suppose in the first year cost is 100. Second year cost is 110. Then it is 115. Then it is 118. Let's suppose it is 125. All of these amounts, are they payable in the respective year? No. They will be payable at the end of year 20. But employer will be recording that as an expense each year? Answer is yes. That should be recorded as an expense. Correct? Why? Because it's a cost which is incurred by the entity each year. Okay. So that's why in case of defined benefit plans, each year, the cost which the employer will recognize in respect of services rendered by the employee, what do you call it as? Current service cost. Okay, so all of these, what do you call them as? Current service cost. Clear? All of them you will term them as current service cost. Clear? Sometimes what may happen is, say in the 5th year, let's suppose we are somewhere in the 5th year. Okay. Now what the employer has done is, employer has changed the policy. So every year, employer is saying the contribution should be 125. Okay. And employer is saying, I'll make it effective from first year itself. In the 5th year, employer has taken a decision. What is the decision? He's saying, I want to keep the amount of gratuity to 125 each year, which is fair enough. So if that is 125, what will you do? Each year you will record 125. But in this case, in the 5th year, employer says, I'll want to make it effective, means I'll pay to my employees at the end of year 20 with effect from which date? With effect from this date itself. Now in this case, what will happen? For the first year, second year, third year, fourth year, expenses already recorded. Expenses already recorded. And what did you call that expense as? Current service cost. Right? But this expense is now required to be increased. So should we say it's a prior period item? No, it's not an error. Because no mistake was made in the first year. No mistake was made in the second year. This has been decided by the employer in the 5th year itself. Yes or no? So now for this revision, which has to be recorded for first year, for second year, for the third year, for the fourth year, when do you make the revision? You will make the revision in the 5th year. So for this revision, the additional component that you record, what do you call it as? Past service cost. Okay. So that is what you call as past service cost. So in the 5th year, 125 which the entity will record, that will be current service cost. But a portion of 1st year, what is that? 125 minus 100. What will you call it as? Past service cost. Similarly, a portion of 125 minus 110 for the 2nd year, what do you call it as? Past service cost. Similarly, a portion of 3rd year, which you record in 5th year, portion of 4th year, which you record in 5th year, what do you call them as? Those are all past service costs. Clear? Clear on this component? Any questions on the current service cost, on the past service cost? Over to you quickly. Any question on this? I think Neeraj has a query. Yes, Neeraj, please go ahead. What is your query? Kuldeep is clear. Yes, Neeraj, please go ahead. Please pick up. Okay, Minu is clear. Kushi is also clear. Prerna is also clear. Neeraj, yes, please quickly speak up. Mustafa says earning amount each year, but the payment will be given at the time of retirement. Yes, that's correct, Mustafa. Nisarg, can you please unmute Neeraj? I think Neeraj wants to speak. Nisarg? Nisarg, please unmute Neeraj. Nisarg? Nisarg, are you there? Nisarg?
Yes, sir.
Yeah, please unmute Neeraj. Huh?
सर मतलब जो पिछले 4 साल में 125 का जो डिफरेंस था उसको हम लोग इसी
Yes.
साल रिकॉर्ड करेंगे.
Yes. And when you record this in the 5th year as a difference, you will not call it as current service cost. You will have to name that. So what is the nomenclature you provide? You call it as past service cost.
ओके सर, बस यही कंफर्म.
Okay, sure. Right? Clear? All right. So now, see in this case, there's one more point which you need to understand and over which we'll have a detailed discussion as we move further in our next session. But I'll just quickly touch upon that point and then we'll wrap up our discussion for today. Shamli is saying, when do you record this past service cost? In the current year only. Okay. Radhesham, I'll come to your query. Now, see, each year, you know, some amount is payable to the employee at the end of year 20. So if let's suppose you are sitting today, do you think you can work out this amount which is payable at the end of year 20 on an actual basis? Answer is no. So sitting today, will you know what is the amount that is payable to the employee at the end of year 20? Answer is no. So that's why for estimating that amount which is payable to the employee at the end of year 20, what do you need? You need some methodology. And the standard says the method that you follow is called as PUC method. Projected unit credit method is what you use for estimating this amount. Okay. And for which? Who do you involve? Actually. So you can say there is a third party consultant. An expert is required to estimate this amount, to compute this liability. And that's why the valuation which this third party actually will do is called as actuarial valuation, using which method? Projected unit credit method. Okay. Over with this, we'll have a detailed discussion in our next session, right? So now what I can do is I can just wrap up my discussion over here. Any questions, any doubts that you may have, let's pick it up and then we'll close this. Okay. And I would request everyone to make sure that before we meet next, you revise whatever we have covered today, particularly this post employment. Otherwise, you'll lose the track. Okay. This is very, very important. Anil is asking, should we need to consider the PV factor? Yes, of course. We'll talk about it in the next session. Okay. Yes. Okay, Kushi is clear. Everyone, any questions, any doubts that you may have? Over to you. No, Ashlesha is also clear. Shamli is asking. Okay, so Shamli is also clear. Great. So thanks everyone for your time today and for this wonderful participation that you've shown. If you have any questions, you can just stay around. But if you don't have any questions, then I think you can just feel free to log out. Okay, great. Thanks, Neeraj. Then I think, okay, Ashlesha is saying, yes, we'll revise. Yes, that's very important that before we meet next, you just make sure, because it's sort of interlinked, particularly this post-employment. This is very important. Anil is asking, sir, the fluctuations. What do you mean by fluctuations? When will the employer record? So see, as regards defined benefit plan, let's get wrapped up with all of these costs, and that is when I'll explain you the accounting treatment. So we are not yet through on this. So if you are talking about defined benefit plan, okay. Meenu is asking, so in the 6th year, it will be called current service cost? Yes. See, even in the 5th year, you'll have current service cost of 125. So we are talking about the catch up of the previous years. That is what you will call as past service cost. Okay. All right. So if you are, Hiram is asking, sir, does the employer contribution in the PF? No. So in the PF, the employer contribution, that is something which you'll call as post-employment. That's why we have covered it here. Okay. Kuldeep is asking, sir, the gratuity is payable after 5 years. Yes. So that becomes due, you can say legally, if the employee completes 5 years, otherwise not. But you don't pay it after 5 years. You pay it at the time of retirement. Okay. Okay, Rahul is clear. All right. So I do not see any further queries. So we can just close this session now. Yeah. So thanks everyone once again for your time and for this wonderful participation. Thanks. All right. So Nisar, we can close this.